Hi, everybody. So let's go into Latin America and the Caribbean. So I wanted to leave you with 4 key messages. First, the price. Latin America is a dynamic RTD and spirits market, and we lead the categories that are growing. Second, the proof. The category strategies that Christina and her team outlined during today, we have been already executing that across many markets in Latin America. We have rebuilt our portfolio, and as a consequence of that, we are growing volume and value together, and we have expanded operating profit dollars faster than NSV. Third, the runway. We have over $10 billion of locally produced spirits in Latin America, an opportunity that historically we haven't tapped into it, but we are doing it now, and we are continue making progress on that. And last one, and this is one of the most important takeaways that I really want you to take, is the system, our operating model. We have been building and investing in capabilities across the region to build a more resilient business, a business that can perform when we have tailwinds, but also a business that can perform in economic downturns or when the consumer is under pressure. So let's get into the market and the price and our performance. This is a $25 billion market. We hold 22% of market share. We have almost 3 times the market share of our next competitor across the region, and we continue outperforming the market. We've been really focused during the last couple of years on bringing back volume as part of our top line growth equation, and we are making progress on that as well. The market was down in volume and spirits 1%. We were up 3%. And spirits and RTD combined, the market was up 2%, and we were up 8%. Now moving into our performance of fiscal year 26. We were up 3% in volume, 7.7% in top line, and almost operating profit growing almost twice the rate of our top line number. That performance did not come from everywhere. It mainly come from 3 categories. But before getting to the specific numbers here, one of the most important decisions that we have been taking across Latin America is to be really focused on fewer priorities, but to invest to drive the scale and the impact that we need. 90% of our marketing spend in Latin America is behind 5 trademarks: Johnnie Walker, Buchanan's, Old Par, Don Julio, and Smirnoff, and Tanqueray in Brazil. That concentration is really helping us to drive share gains across the core categories at once, instead of trying to defend everywhere. Whiskey is our number 1 category. We are the number 1 player. We are gaining share, and in a few seconds, I'm going to tell you what are we doing in whiskey as a category. Vodka, growing 19%, gaining 269 bips of market share, and this is a Smirnoff Plus RTD. And now this is the fastest gaining share category that we have in our portfolio. And tequila, growing, but we are number 2. We are not satisfied. And this has been one of the strategic tension points that we have been dealing actually during the last 3 years. And I will come back to it to let you know what are we doing about it. So let's start with whiskey, our heartland. Whiskey is by far the largest category in Latin America, over $6 billion in retail sales value. Julie, during the breakouts, showed the category strategy. So I'm going to tell you what are we doing and how we are executing that across Latin America. We rebuilt the entire portfolio across mainly 3 price tiers. Below $10 to drive accessibility with formats and with 2 strategic value plays, White Horse and Black and White, which is really helping us to drive recruitment into the category. Between $10 and $20, with real intentional focus behind Johnnie Walker Red Label, this is the segment of the market in which the majority of the volume sits. So Johnnie Walker Red Label and formats with all par are really helping us to really capture, and to re-recruit more consumers into this price tier. And then between $20 and $80, which is the core part of our portfolio, Johnnie Walker Black, Buchanan's, and our super premium variants across the region, which the most relevant ones are Johnnie Walker Gold Label and Buchanan's 18. So 3 priority trademarks, 2 very strategic value plays. And here's an example of what the price and pack architecture has returned to us. And this is very important for me to take you through. This is not just about pricing repositioning. This is having the right brand, the right format, with the right price, in the right channel. So this is beyond just repositioning pricing. And you can see here the results. Volume up 28%, NSB up 21%, and gross profit dollars up 18%. So in whiskey, we have rebuilt our leadership. Now let's talk about vodka, including RTDs. This is one of the most exciting categories right now in the region. First, RTDs. In RTDs, right now, we are focusing on driving the scale. We are now in Latin America the #1 player in RTD. And Smirnoff Ice is the #1 brand and the fastest growing brand across the region. Second, we've been focusing in creating iconic drinks to really recruit consumers from locally produced spirits. And Brazil is a great example of that with Caipirosca. Potentially many of you are familiar with that serve. But that is one of the most popular serves in Brazil. What it's doing is really disrupting cachaça. Cachaça is cane. So in the on-trade, it's really helping us to recruit consumers at a scale, just by driving that serve consistently across the market. Third, flavors. And flavors, we've been very intentional to design products to disrupt, again, these local consumption occasions. And this is the example of Smirnoff Tamarind in Colombia, which is really, really doing that. 60% of buyers of Smirnoff Tamarind in Colombia are new to vodka as a category. And 40% of them are switching from aguardiente. And finally, with innovation, we are very excited about this project, which is Smirnoff Ultra. Again, with the intent of recruit from out of vodka as a category. It's a smoother version of Smirnoff, lower ABV, with a splash of coconut water. Thinking about not just the liquid, thinking about the serve, and how that serve and that drink will continue recruiting from that massive value pool, which is cane in Brazil. So the summary on vodka is, this is not vodka gaining share of vodka. This is a Smirnoff really tapping into local consumer consumption occasions, especially in Colombia and in Brazil. And now tequila. As I said at the beginning, this has been one of the biggest tension points, but we are making progress. The main issue with tequila, sorry, I'm not doing anything. Can we go back to tequila, please? Okay. In tequila, we were clearly over-indexed to super premium. Don Julio as a trademark in Mexico used to be mainly one variant, which was Don Julio 70 or Don Julio 70, which played just in the super premium segment of the market. And we were overexposed, especially in a category that was in decline and where the consumer was under pressure. 51% of the total volume of the market sits below the $30 price tier. And we were not playing there. And actually, that was one of the few pockets of growth of spirits in Mexico. So what we did 3 moves. We repositioned Don Julio 70 to be more competitive with Maestro Dobel, which is the leader of the premium segment. Second, we repositioned Don Julio Blanco to be the most aspirational variant and the entry premium price point in the market. And third, we launched formats, specifically 2 formats, 375 ml on Don Julio 70, Don Julio 70, and on Don Julio Blanco, to play in the $25 price tier and in the $15 price tier. So with that, now we are maximizing the power of Don Julio as a trademark, but also we are competing across all price tiers in the category. So what has been the outcome of that, of the results? It's early stages, but it's promising. Since December, every single month, we have been outperforming the market. And the market share moved from 13% in July 2025 to 17% in May 2026. So we are making progress. The job is not done yet in Tequilas Mexico, but we will continue delivering the strategy, executing the strategy to make sure that we are playing and recruiting consumers into the brand. Now let's move into the system, which is the operating framework. The slide that you are seeing here is an example of Brazil, but we are running the same system, the same operating framework across all markets in Latin America. We've been focusing in building and investing behind 3 core capabilities: RGM, revenue growth management, IBP, integrated business planning, and commercial excellence. On RGM, as I said at the beginning, it's a holistic approach in how we are going to meet the consumer where the consumer is, which is well beyond just pricing repositioning. On IBP, with integrated business planning, we are having a better pulse of the real consumption demand of the market, which is helping us to have better predictability, to be more agile in how we are reacting to how the consumer is behaving and changing, and more importantly, to have one commercial end-to-end system, marketing, sales, and supply working as one single unit. Now, let me pause on stock in trade. And you can see the results of the different capabilities that we are delivering in the market. On stock in trade, we've been expanding our stock trade monitoring. You can see the example in Brazil, moving from 67% to 83%. We have removed $20 million of stock in trade in tier 1 customers. And as a consequence of that, we have moved from 70 days to 50 days of coverage. In Latin America, just to give you an example of what is happening in Latin America, our coverage right now is 91%. We have removed around $130 million over the last 2 years on the stock in trade in tier 1 customers, and we have moved from 105 days to 75 days of coverage. The capabilities that we are building, plus the robustness of our control environment, is giving us the confidence that we will continue sustaining this in the future. And going back to the commercial excellence, on-trade has been a key priority area for us. And as Dave said at the beginning, it's a priority for the company, it's a priority for Latin America. We have improved our outlet segmentation, we have more feet on the street. We have now prioritized 40,000 outlets. And you can see the KPIs and the improvement there. More than 13% of selling out growth, and 3 times the rate of sale versus the outlets that we are not covering. As a consequence of that, we are improving our service, 94% of OTIF, but more importantly, what the real feedback is, what the customers are saying. In the Advantage survey, Brazil moved from the 20th place to 11th place in 1 year. Great progress, still a lot of room for improvement. This is, for me, what really gives me the confidence around how we are going to continue shaping the future of the region. And as you can see, the results are not a consequence of a good year, the output or a consistent system across the region. And now, what is the future? What is the runway? And what we are excited about? We will continue. There are 3 things that are not a forecast. The first one, we will continue scaling the category strategies to the rest of the markets in Latin America. Second, RTDs. Exciting market, 3.5 billion, growing at 24%, and we have the #1 brand. And third, which is one of the most exciting ones, as I said at the beginning, locally produced spirits. Cachaça in Brazil, aguardiente in Colombia, rum across the region. And this is not a promise, it's happening right now. As I said at the beginning, aguardiente, Smirnoff Tamarind is recruiting consumers from cane aguardiente in Colombia. The Caipirosca Serve is recruiting from cachaça in Brazil. And Black and White and Old Par are recruiting rum consumers. So the strategy is in action. That is what we are doing in Latin America. We are moving from being an international leaders player to be the most competitive player in total spirits and RTD.